You're listening to the Yahoo Finance Small Cap Show, powered by Agoracom.com, the web's leading small cap portal.
Welcome to the show, everyone. I'm Al O'Grady, and today we're pleased to welcome Dr. Vern Rampton, President and CEO of Kinbauri Gold Corp, which trades under the symbol KNB on the TSX Venture Exchange. Mr. Rampton will be talking about a press release issued today, Friday, May 29th of 2009, what it all means, and how it'll impact the company and its shareholders, as well as a number of other very important issues affecting the company. Now, for those of you who are new to the rapidly evolving story of Kinbauri Gold, the company is involved with mineral exploration, focusing on the development of precious metal prospects in northwestern Spain, Nevada, and Canada. Dr. Rampton, welcome to the program.
Good morning, Al.
Good morning, Vern. Vern, as I said from the outset, a number of issues on the table, and we'll be getting into all of those in greater detail. Not just the press release from this morning, but other issues over the last few days and weeks. Now, first, let's start with the press release. As I said from the outset, the date of today's recording, Friday, May 29th, and the press release crossed the wires about an hour ago, where you announced that Scott Wilson Mining has completed its review of Kinbauri's revised mine plan for the El Valle Carlos project. Tell us about it, Vern. What does all this mean?
Well, this is a very important review because we had, since the scoping study was done on our behalf by Scott Wilson, we've had our engineers look carefully at the mine plan and come up with a revised mine plan that most importantly achieves two milestones. One is that we've significantly reduced pre-production capital from at least a third, from 67.5 million euros to 40.2 million euros, and from 23 months to start up to 12 months to start up. These are very important because they were always, I think, in investors' minds, very difficult hurdles for a small company to overcome, the high pre-production capital cost and also taking so long. We have, announced this in a number of our previous press releases, but I'm sure there's been doubters thinking that we're just self-promoting, but now we've had an independent engineering firm look at this and confirm it. There are some things that we still have to do. We have some drilling to do. We have some test mining and everything, but we're well aware, we always were well aware of those requirements, and as we move forward in feasibility and pre-production development, these will all be taken care of. We're quite confident of this. So this is very important. The investment public is going to realize that we can achieve this quickly, and when cash flow starts, and a year from when we start this process, or hopefully within a year, they're going to be unable to refute it in our share price and value to shareholder.
In essence, I don't mean to make this an oversimplification, but it's got to be good news because, in essence, you're getting third-party reaffirmation that you can do something cheaper and quicker. Isn't that it in a nutshell?
That's it in a nutshell.
So I guess you had mentioned a couple of things. You still have to do a few more things as far as drilling goes. Maybe you can go into a little bit more detail. Where do you go from here now as far as that revised mine plan is concerned?
Well, it's been our intention to proceed ahead with a feasibility study, and we're confident that some of the drilling will lead to upgrading of our resources so that we can develop as per this new schedule. We've always had, even under the old mine, to test mine this Area 107, this high-grade ore zone. That's very important. It'll just determine what mining technique we have to use. We've been relatively conservative on our estimates to date. Perhaps it will cost us less to mine it. Perhaps it will cost us more. The feasibility study is done. A lot of those studies would have to be done as normal engineering studies, but we're doing it because we may need a feasibility study. We still have a requirement for some CapEx to be raised. I'll talk about a deal that's providing us with much of it, but we may have to need a feasibility study to go and get, for example, subsidies from the government, which are available in Spain. So we're doing all those studies, but most importantly, we're going to be starting our pre-production development quickly too, and that means access to the upper part of this richer zone.
Okay, let's move on. A number of corporate developments concerning Kinbauri, not on the mining side, but more on the business and the legal side. Let's start with Glen Eagle. Tell us about the current business relationship that you have with Glen Eagle, where you plan to go with that, and how it can impact the company and shareholders.
Well, with Glen Eagle, a while ago we signed a binding letter of intent, and then we followed that up with subscription agreements, binding subscription agreements in this. This came out of a long, about 4-month strategic review process that we had our financial advisor help us with. And this Glen Eagle provided us with the top bid, so to say. In the end, this agreement has them putting forth 37 million Canadian dollars, and in exchange they get 50% of the basically the El Valle Carlos asset. This 37 million goes a long ways to meeting those pre-production capex requirements. And in fact, when you look at their input and our input, there's going to be so little left for project financing. It's going to be very easy to get, I would say, even in today's turbulent times. So that was a very good thing, but along came Jaguar Financial Corp, who didn't think this was in the best interest of the shareholders, I guess, and they've filed a motion to stop this. And so rather than go ahead with it and risk a court someday turning it back on us, the lawyers have agreed, well, how should I say, a full hearing on this will be approximately in the middle of June, and we'll get a decision from a judge, and we're very, very confident and been assured by our lawyers that we will be successful on this. And once that's out of the way, then we'll close this deal and start the whole process towards production.
Okay, obviously you jumped right into my last question, saving the best or the worst for last, depending on your perspective, talking about Jaguar. I guess the question is, why and how did all of this come to be? I know the matter is before the courts. You have to be careful as to what you say, and we can all appreciate that. But how did this actually come to be? Can you give us any sort of perspective on it?
There's another party involved, Orvano Minerals, and they were actually involved in a strategic review. They didn't have a successful bid, but they came forth. They saw that how great this project was with, for lack of a better word, a hostile takeover bid. I mean, we just think it's ridiculously low, but it is a cash offer for all the shares at a very low price. I think Jaguar thought that was the way to go. Now, Orvano's bid is conditional on the Glen Eagle transaction not being closed, but the Glen Eagle transaction was a binding agreement. And it was a binding agreement because we needed money to move this along. It was costing us money to just maintain our facilities. And we think it's a great agreement. So there's, I guess, a difference of opinion there.
Right. In a strange kind of way, this has to be a compliment to you. If someone's trying to do a hostile takeover as to what you have, then obviously you've got something. Isn't that really the case?
Well, it's really the case. I guess we're sort of not insulted, but we've kind of realized that all along that we have something. And we actually had a senior mining official visit our site the other day and tell us what a hell of a project we had there, and he understands why we're so resistant to this, relatively cheap offer.
Vern, as always, I leave my guest with the last word. Any final thoughts? Anything that you'd like to add right now, either about the press release or the developments with Glen Eagle or Jaguar?
No, I think we'll just leave it all there. I guess one of the good things about this is we seem to be moving, all this is happening when we're getting positive movement in both the gold and copper markets. As you know, we have quite a good copper credit. I see gold's been continuously moving up, moving through 975 U.S. an ounce today, and I think copper's back over 210. So we're getting some positive vibes. That's going to help all of us in the end, I think.
Okay. On that note, Dr. Rampton, I want to thank you very much for your time and being on the show and providing our audience with some great insight about Kinbauri.
Thank you very much, Al.
Okay.
Always glad to talk to you.
Yes, likewise. And Kinbauri Gold trades on the TSX Venture Exchange under the symbol KNB. And you've been listening to Dr. Vern Rampton, President and CEO of Kinbauri Gold, on today's Yahoo Small Cap Show, produced by Agoracom. I'm Al O'Grady. Thanks for joining us.